Well, before the decision was announced at 2:30, the market was putting odds of 75% on a rate cut and had been trading the dollar on that basis. But at 2:30 it was surprise, surprise, and traders in 14 out of 17 dealing rooms were directing hard stares and pursed lips towards their economic forecasters who'd got it wrong, while scrambling to catch up with what was going on the market. And here's where the dollar has finished up, just under 108 US cents and above 82 euro cents for the first time in the history of the euro. And something similar was happening in bond dealing rooms. This is the 10-year bond yield today. It had been below 4% for 3 months, but suddenly jumped above 4 at 2:30. And yes, the All Ordinaries dropped at 2:30 as well, although not quite as dramatically as the exchange rate or market interest rates. Its peak at around 1:30 was 43.80, and by the close it had fallen nearly 40 points to finish 0.5% lower on the day. NAB shares slumped after disappointing the market with its trading update. Telstra went to a 2-year high, and Kohler jumped because short sellers got squeezed after its results. Chinese market fell 2% today, while most European and US markets were steady to slightly lower, except for Greece, which jumped 3% as the Greek government caves in to one demand after another from the IMF, the EU and Germany. The latest demand was that they cut 15,000 public service jobs, which the beleaguered government agreed to last night. Now, Greek unemployment is already 19%. It's not on this chart, but if it was, it would be off the chart. The great success story for employment, apart from Australia, is Germany, and that's because it's got an undervalued currency, thanks in part to Greece's woes. And that's finance.